In the equity markets today, taking a look at the March NASDAQ futures contract at the CME Group, second day lower for the tech-heavy index. It was the worst performer of the three majors, only beating out the Russell by about 10 basis points, but down about 0.5%, but that's not really the whole story. It was only up about 13 basis points on the highs at 13,785. On the downside, 13,543 was down 1.63% from yesterday's settlement. So it almost reversed all of last week. Down on the lows, all of last week's gain was almost completely reversed. We got back 2/3 of it though before the close, still finishing negative, still finishing down for the second consecutive day. Interestingly enough, February still, if the month were to end today, would be the best year of 2021 for the NASDAQ and be the best year since November of last year. Now, inflation, part of the story, or at least the perception of future inflation, as PPI came out stronger than expected year over year, and retail sales not only beat expectations, but beat it handily and beat last month's numbers as well, turning positive 5.3 and 5.9% to the good, respectively, for those two numbers, retail sales and retail sales ex auto. It was a very strong performance and actually turned equities negative, leading the NASDAQ lower on the perception of possible inflation and what that brings with it. And what that brings with it is rising yields. 10-year note touched a one-year high in yields, got up to about 133 overnight, went back up to 131 after that retail sales blowout figure. Now, the tech-heavy NASDAQ is going to suffer the most if yields rise fast, as well as the Russell to a certain degree. But tech companies, as well as small cap companies, tend to have more debt, and that debt gets serviced at yields that have been low for so long. So the tech is definitely an attractive investment when rates are low, but as they start to rise, that tech sector gets hit a little bit with profit taking and the worry that some of that debt won't be serviced as well. So when you see yields moving like this, you're likely to see the NASDAQ lead the three major indices down, and that's what it did today. The speed with which the yields are rising tell you that there could be inflation coming, at least the market thinks so, and it could be a little bit of trouble for the NASDAQ if it were to continue.